Hey guys, and welcome to another episode of the Strategy Lab video. And in today's episode I will tell you how exactly I almost tripled my account in 1 month. If you guys are new to this series, well, in these videos I am demonstrating you some strategies that I created. I also do the backtest for these strategies, and I demonstrated the statistics of that backtesting, and I also share with you some real-time trading statistics. Typically for one strategy I open one demo account and I only execute trades using the strategy rules, so demo account only shows you the statistics for that strategy. And I execute trades real time, and then I show them to you how it goes. Well, it's up to you how you will use this information. You can start trading it as it is. You can do your own backtest to check the information, but what you should keep in mind is that you are the ones who take the responsibility for your actions. So if the result of implementing this strategy is losing your money, you are the only ones to be responsible for that actions. So after that disclaimer, let us start. This strategy is based on the Christmas strategy that I demonstrated to you in December on Christmas. Well, it is actually the same strategy that I demonstrated to you, but slightly fine-tuned. I've been fine-tuning it in January and some part of February, and when all details were fine-tuned, then I started implementing it on a real-time trading demo account. Okay, well, if you didn't watch that video, if you didn't watch this video, then you should go here and hit this link in annotation, right part of the screen, top right corner of your screen, or you hit the link in description that says Christmas strategy. If you guys already watched this video, so let me simply remind you the main rules and the main idea. Well, the main idea is as following. First of all, you find the pattern. Doesn't matter how you find the pattern, but in my backtesting I was using MPS version 5.5 pattern recognition software with Prex 6 algorithm. So these were my settings. Then I enabled patterns, and the patterns had the following details. Of course, the name of the pattern is up to you, color is up to you, but the B point ratio is important. The C point ratio is also important. So 0.333 to 0.786. C point is 0.333 to 1 of a B leg. D point is 0.786 of XA. Stop loss is 105, and I disable targets. Okay, as you can see, bull patterns are disabled. They are invalidated because price never went there. So if you click here, and bull patterns will disappear. Okay, so also one interesting thing that I am using this box tool, which is 10%. It can be disabled or enabled in the settings of the indicator. So when you say disable 10%, then the box disappears. When you say enable, then it appears. So you see the box appeared. Let me explain you what is this box, because many of you don't know what is that. So this box is the 10% of your C to D lag. So if you measure the C to D lag, and it is 35.9 pips, then 10% of that is 3.59. So this 3.59 is the buffer before the completion, 3.5, 3.6 pips. So your leg should be completed at least 90%, and then the rest of 10% is where the reaction may start. Starting from here, place a limit order. Right now we don't talk about any money management. Simply place a limit order when it hits the line. Then if price reverses and hits 382, let me stretch the Fibonacci. Initially, of course, you stretch your Fibonacci to hit the high of that candle. You don't have these candles, of course, yet. So this was the first candle, and it should go to 382. Let me disable all the levels, Fibonacci levels. So I'll disable this, this. Okay, 382. Sorry, disable this, and disable others. Okay, now we have only 3, 0, 100, and 382. Okay, you can see that price didn't touch that, but instead it first exceeded the high of the trigger candle. So you should enter, add into your position when the high is exceeded. You see 1 pip above your high, and you open one more sell. Well, it didn't reverse at this at the very beginning when it exceeds. Yes, it first installs a new high here. So what you do here, you wait for price either to hit your take profit or to hit your stop loss, and in case it exceeds a new high, you open one more trade. So let me show it to you. So this candle exceeds this high. That's why you open one more trade, restretch your Fibonacci, of course. At this level you enter, and you wait for price to hit 382 or to hit stop loss, but price installs a new high, so you open one more, and then it installs a new high. That's why you open one more. So you open it every time it installs a new high until it hits stop loss or take profit, and then it finally hits the take profit. Okay, so now you can see how it goes. Well, your first trade, it starts here, and take profit at this one gives you this. Second trade starts here, gives you this. The third trade starts here, gives you this profit. Trade number 4 gives you this, and trade number 5 gives you this. This entry technique is called scale in. You probably heard about scaling out when you close half of your position when 382 is hit, and then you close another half when 618 is hit, trading this pattern. This is what is known scale out. But this one is known as scale in, when you don't open your whole position at the very beginning of pattern completion, but you open your position gradually. So also you can distribute your parts of the position either equally or incrementing. So in my money management that I used in this strategy, Christmas strategy, yes, it is distribute incrementing. So the first one initially was set to 0.05. When the second trade is opened, it is 0.07. So it is actually 0.02 times greater than the first one. The third one is 0.09, like this, 0.09. Number 4 is 0.11, yes, and number 5 is 0.13. So 5 trades here, 0.13. If you will calculate total amount, it is 5 plus 7 is 12, plus 9 is 21, plus 11 is 32, and plus 12 is 44, I suppose. So 0.44 was the total amount of this position. 0.44. Well, let me check it using calculator. Okay, 0.05 plus 0.07 plus 0.09 plus 0.11 plus 0.13. Okay, 0.45. So the total amount is 0.45 in this position. Well, and then it either hits the stop loss, and your greatest position gives you the smallest stop loss, of course, because it is closer to your stop loss level, and your largest loss is your smallest position. You see that? And when it hits take profit, it is vice versa. Your smallest position gives you smallest profit, but your largest position gives you the largest profit. You see this? At the same time, it is the smallest risk because it is closer to your stop loss, and it is the greater reward. This is the benefit of scaling in. So you gradually open this position until it reaches the amount that you predefine. Okay, so you can limit this amount to whatever you want. In my case, it was 0.44. So maximal amount of trades that were opened were 5. So this means that in case it installed a new high, I wouldn't open that. I would only restretch the Fibonacci and wait for price action to hit either take profit or stop loss. Okay, to execute these trades, of course, I didn't execute them manually. I created a special robot that I called an MPS robot. It actually opened trades using 5-minute charts, and it opened on average 15 trades a day or something of that kind, on average. Okay, now let us see the statistics, how it goes, trade in real time. We can delete this stuff. Okay, bull patterns, disable some patterns. I'm just setting the default settings. Now let's go to account history. Let's make sure that we have all history. Looks like we have all history because the first one is the 23rd of February 2020, and it is depositing $500. Here are the trades. Okay, and we have a profit of 848, and the total amount is 1,348. So if we calculate that, 1,348 divided by initial deposit of 500 and multiply it by 100, then we will have 269%, almost tripled, but no, 2.5 times multiplied. Not 3 times, but 2.5 times. Let me save that as detailed report. Okay, replace the statement. Here it is. And you can see the amounts of these 0.5, 0.5, 0.5, 0.7, 0.9, then 5, 5, 7, 9. So you can see how actually it was incrementing. And then at some time here, it was March, yes, in the beginning of March maybe, I found that it produces a bit greater drawdown that I actually expected, and I made the position size slightly less. So now instead of starting from 0.5, I started the initial position from 0.4, and the rest was the same. So it was 4 incrementing by 2, 6, 4, 6, 8, 4, 6, 8, 10, and the rest. Okay, so here's the chart. Looks pretty good. This was the drawdown that I was talking about, and Well, I made a decision to make a position slightly less. Here's the balance that I have right now. Here's the initial balance. So if we divide this by this, we will find how much this current account, how many times this current account exceeds the initial account. It exceeds 2.69 times. Okay, this is the current take profit stop loss, current amount of money that I have. Oh, the swap is positive, but in many cases swap is negative. That's why totally the swap was minus 21. So swap is initial expense that we are to pay on top to our expenses, like like spread, for example, like deposit commissions, like withdrawal commissions, and whatever. So swap is also plays some role. Let's go and see. The profit factor is 1.85. So this means that in my trading, I generate 1.85 more than I lose. Well, every dollar that I invest into market as my stop loss is not a loss, it is an investment. I invest $1 and I have 1.85 back. So this is what profit factor number says, 1.85. Expected payoff is 3.3. This means that in each and every trade I am expected to generate 3.3 on average. Of course, on each and every trade, some trades will be losses, but some winners, they will be greater than that. This is the average number. Maximal drawdown is 16%. 16%. Well, it was this one. It was this one. So I just calculated that my starting amount of 500 was not a big amount. That's why this $168 retracement, $168 drawdown is 16%. If my account were, let's say, 500, using the same numbers of if my account were 5,000, then using the same number of position size of the same size, yes, the account would be the drawdown would be slightly less. Okay, relative drawdown is the same. Total amount of trades 2.57, and the amount of trading days, if we talk about 1 month, in 1 month we have 20 days on average, 20 and 21 depending on month. So let's calculate how many trades a day I have. 257 divided 20, 12, 13 trades a day on average, 12 or 13 trades a day. The amount of profitable trades, 78. So you can see in my backtesting I was given the number of 74 instead of 68, sorry, not 78, 68. And in my backtesting I was given the number of 74. This means that some winners are ahead because my real-time trading results are worse than those that I had in backtesting. Of course, they may be worse because of swap. For example, if my winner was, let's say, $1 and my swap was minus $2, that's why regardless of my winner, my swap would turn the whole position into a losing position, yes? That's why we could have that less probability than it should be. Of course, my winners are less than my losses because of this swap as well. The swap was not calculated in backtesting. It wasn't calculated, and so it can be less in each and every trade. Average profit trade is 10, average loss trade is 12. So in each and every trade I have a profit $2 less than my stop loss. But with 68% probability, the overall expectancy is 3.3. Okay, so guys, you see the results. The count almost tripled, 2.5 times multiplied, and well, I think the idea and the trading results are really impressive, and you can start using it in your real-time trading, or you can do further backtesting of that. You can do your own backtesting. Maybe your broker will provide a bit different numbers, and the strategy itself will be working slightly different way. Of course, you should test it with your broker. At least test it using your demo accounts first. So test them for several months to see how it goes. The first month is very nice to me. Okay, well, that's it about the strategy. The idea is to enter patterns, not using the whole position, but entering scale in. Split your position by parts, and you first enter with smallest amount, then greater, and greater, until it hits take profit or stop loss. So statistics and real-time trading statistics and backtesting statistics shows that this idea has a positive expectancy, so you can generate money using it. And if you guys want to completely repeat the results of this strategy, of course, you will need to use MPS version 5.5 to find the same exact patterns that I were using. Of course, you can use your discretionary systems to find patterns, or maybe you can use some other indicators or other scanners to find patterns, but they won't be exactly the same that I were using. So in case you want them, then you are welcome to visit my website www.mpstrade.com, and as usual, you can find a link in the description. And until then, good luck and good trading. Hope to see you soon.